628-148-45. Main Capital. I think it's like 39 and change, 39, maybe 85. It's a rather high cost stock. Its yield is 20.5 cents quarterly. It's one of those BDCs, business development companies. They own equity positions in the companies that they loan money to. So for the last long time, I've been looking for, since they started paying dividends to the time they're paying dividends now, all they have done is maintained or raised them. It's been 20.5 cents for quite a while, even through the pandemic. It's been 20.5 cents for a while. 6.48% is not the highest possible yield you can get. You can get some REITs that are giving you higher yields. I looked at another REIT that I used to like, was Apple Hospitality. It was giving like a 7%. Now it's less than 1%. It's worse than Apple stock. The other Apple, you know, the phone company. Apple Hospitality gives a smaller yield than that. It's like 0.27. But BCD, the BDC, the Business Development Company, MAIN, 1.48 is the beta, which is a little too high. 0.45 is the earnings per share, and it can cover the 20.5 cents for the dividend yield out of that. So the companies that they invest with companies and they loan them money. That's a good deal. They're long-termers. They'll deal with a company for like 20 years. They want to consider themselves like business partners because the volatility of the company is going to go up and down, up and down, up and down. And they stabilize that. They stay and realize that. But overall, for as long as Maine has been around, MAIN, the company has increased its dividend or maintained its dividend. I looked over when I went into MAIN, DIV, HIST, Maine dividend history, hit the NASDAQ. It'll show you that never has the dividend gone down every quarter that they've paid dividends. So if you were to buy it at this price, 39 something, I think it's 39.85. I'm not sure. It'll be I hope to put it in the notes if I remember. Then it's never gone down. The dividend hasn't. They're buying into solid companies. They're like the small and mid-sized companies are the ones they invest in. They don't loan money to like the blue chips, they call them blue chips. I think they call them blue chips. The big companies like AT&T, they don't loan money to AT&T. They don't lend money to T-Mobile or anybody like that. They have to be the small and mid-sized companies that they invest in and they loan money. So when they get the equity position, they get an equity position in the company and then they help them run it. So this one, MAIN, in my opinion, I own the stock. In my opinion, it appears to be a long-term good investment for me. I've had some disappointments, like I told you. Frontline was a disappointment. I was expecting that company to up and up and up and up the dividends, and they cut the dividends. So I stopped investing in that company. Frontline. I was a big promoter of that company stock. I liked that company stock. And then they betrayed me by cutting the dividend down to, I think, zilch, nothing. But Maine, M-A-I-N, that company has, through this pandemic, maintained the same dividend for a while. So if you go into MAIN, like I said, DIV, HIST, you can see how long they've maintained it. To me, it's a solid stock. To me, I like the stock. To me, it looks like if you buy that stock now, based on their history, it may not be so, but it appears so to be to me that company, some point in the future, will probably raise its dividend, and then you'll have an equity position and a higher dividend if they continue to do what they're doing well. I have no problem with MAIN right now. If in the future I see they cut the dividend, or in the future I see it becomes less of a profitable stock, and I noticed it, I will most likely do a new video to tell you to get rid of that stock. But at this point, I don't see any problem with MAIN, Business Development Company. So, if you have a financial advisor, and that financial advisor likes the stock, or if you know what metrics you like to look at, that would appear so to be, to me, a company that is solid. I remember I used to like Enron before they cheated some people of some money and then they messed up. Before Enron was a household word, I knew about Enron. I was checking out all the energy companies. But now, I'm more cautious. Enron had every kind of way that you could do with energy. And so, I thought that that was a good idea. The thing was, in my opinion, Enron's downfall was they allowed the people who were working for Enron not to get a percentage of what they brought in. And so if they cheat people, if someone gave them $1 million, someone gave them $1 million to invest in something, and the other side made $10 million, and they did something that was scandalous, they would walk off with $1 million, $500,000, or whatever it is, and cheat the company. If you develop a company that makes sure that every single person that makes money for the company gets a small piece of that money, then it is more likely that they will help that company. Back to MAIN. In my opinion, the beta is just a little bit too high, and the dividend is reasonable, and the earnings per share cover the dividend. So in my opinion, this particular time, I particularly like this stock. I own this stock. Ask your financial advisor. Maybe you want to own it too. It's steady income for you. I believe it's quarterly. I'll have to check, and then I'll put it in the notes. So, have a great day. Live long and prosper. Peace out. Have a jolly good day. And God bless. I say God bless. I say God bless America.